Hello and welcome to you all. I'm Ollie Law, Editor-in-Chief of Unbreakable Ventures, a threat landscape newsletter to help businesses and professionals thrive through any crisis. You are listening to our fortnightly risk email where we dive into emerging and current risks from around the world, focusing on some big stories and some you may have missed. We use the categories from the World Economic Forum's Global Risk Report to simplify the threats we're monitoring, but we also do some deep dives and interviews with industry peers. If you like this sort of resource, make sure to subscribe wherever you get your podcasts and email newsletters from. You can head to unbreakableventures.com and check out our weekly resource to see if it's something that could help you in these turbulent times. It's Tuesday the 25th of March and we're discussing the top risks between the 10th and 24th of March 2025. So grab a coffee and let's get into it. The commercial real estate market is facing mounting stress, particularly in secondary and tertiary markets that don't often make the headlines. With rising interest rates, shifting work patterns, and an impending wave of loan maturities, businesses, investors, and financial institutions need to be aware of the risks ahead. Regional banks and smaller lenders are particularly vulnerable. Unlike major financial institutions, they hold a significant portion of commercial real estate debt, about 70% of the $2 trillion set to mature by the end of 2025. As property values decline and refinancing becomes more expensive, the potential for widespread defaults increases. The recent struggles of New York Community Bank serves as a warning, as unexpected losses from its real estate portfolio triggered a sharp drop in stock value and forced increased loan reserves. The work from home shift is another major factor, with office vacancies rising, especially in older buildings. Demand for commercial space is dwindling. This is pushing down valuations and increasing financial stress on property owners who rely on rental income to service debt. In the US, office buildings represent a large portion of distressed properties, and cities like Houston, Dallas, and parts of California are seeing particularly high exposure. Meanwhile, in Europe, countries like the UK and Germany are also experiencing surging vacancy rates, impacting investment confidence. Interest rate hikes have further complicated the situation. Many commercial loans were originally issued during a period of historically low interest rates. Now borrowers are facing significantly higher refinancing costs, in some cases doubling their debt payments. While the Federal Reserve has started easing rates slightly, long-term yields remain high, keeping financing costs elevated. So who will feel the impact? Regional banks with heavy commercial real estate exposure are at risk of earning erosions and potential bank failures if default rates rise. Property developers and investors holding high leverage assets may struggle to refinance, leading to distressed sales or foreclosures. Businesses relying on office space may see rising rental costs or difficulty finding affordable locations. Local governments, which depend on property tax revenues, could face budget shortfalls if valuations continue to decline. Even investors holding commercial mortgage-backed securities should be cautious, as potential defaults could erode their portfolios. Mitigating these risks requires proactive steps. Lenders should stress test their loan portfolios, increase reserves, and work with borrowers to structure loans where possible. Businesses should reassess their office space needs and negotiate flexible lease terms to protect against volatility. Investors must conduct rigorous due diligence on commercial real estate opportunities and consider diversifying their portfolios to reduce exposure to at-risk markets. The next few years will be critical for commercial real estate. The combination of high debt maturity, shifting work habits, and economic uncertainty means stakeholders need to stay vigilant. Those who prepare now will be in a stronger position to weather the turbulence ahead. While Unbreakable Ventures is primarily aimed at supporting businesses, the data privacy risks surrounding Saudi Arabia's acquisition of Niantic's gaming division is an important story we should all be paying attention to. Saudi Arabia's public investment fund, through its subsidiary Scopely, is acquiring Niantic's gaming division for $3.5 billion. For context, Niantic is best known for Pokemon Go and other augmented reality-based games, but beyond gaming, this deal is about something even more valuable: data. Niantic's games collect vast amounts of personal data, including location tracking, account details, and even information about minors through parental consent mechanisms. Previously, This data was protected under strict regulations like Europe's GDPR and the US copper law. But now, with the acquisition, the data of millions of users worldwide could be subject to Saudi Arabia's new established Personal Data Protection Law, or PDPL. The concern is that PDPL is still in its infancy. Unlike GDPR, which grants individuals clear rights to access, delete or control their data, PDPL has broad exemptions, especially regarding government access and national security interests. This means businesses and users may not have the same level of control or transparency over how their data is used. For companies operating in the gaming, tech and data-driven sectors, this acquisition presents serious compliance challenges. For example, there is legal uncertainty that if your business partners with Niantic or Scopely, you may need to reassess data sharing agreements to ensure compliance with privacy laws. Furthermore, data previously stored in the US or Europe may now be governed by Saudi laws where cross-border transfers face restrictions. This could lead to operational inefficiencies, new legal liabilities, and even potential fines for non-compliance. The association with Saudi ownership may raise concerns among consumers, particularly given previous global scrutiny over human rights and digital privacy in the region. If your business relies on trust and transparency, user confidence could take a hit. But the most important element concerns minors who have religiously used Pokemon Go. For families, the biggest risk revolves around children's data privacy. Under US copper laws, companies must obtain verifiable parental consent before collecting data on minors. But will these protections remain in place under new ownership? If policies change, it could expose sensitive information about minors to different legal interpretations, raising concerns for parents worldwide. So, what can we do? If you and your children use Pokemon Go or other Niantic games, review your privacy settings today. Businesses handling customer data should conduct a data audit and consult legal experts to navigate evolving compliance requirements. And employees who rely on location-based services or apps should stay informed about how this acquisition might affect workplace security and data protection. Researchers have uncovered 29 undocumented commands in the ESP32 Bluetooth chip, a component found in over 1 billion devices worldwide. These commands, initially described as a potential backdoor, allow for direct memory manipulation, MAC address spoofing, and even packet injection, posing significant security risks. While the manufacturer, Espressive, insists these commands were only meant for internal debugging, security experts warn that they could be exploited to impersonate trusted devices, steal sensitive information, and bypass security measures. Attackers with physical or remote access could manipulate Bluetooth connections, extract stored credentials, or even gain control over connected networks. For businesses, this presents a major supply chain security risk. Many Internet of Things, or IoT devices, including medical equipment, smart home products, and industrial systems, rely on this ESP32 chip. If compromised, these devices could serve as entry points for hackers, leading to unauthorized access or widespread network breaches. Espressive has committed to removing these commands in a future update, but that doesn't eliminate the risk for existing devices. Security teams should conduct immediate risk assessments, ensure firmware updates are applied where available, and consider additional security layers like encrypted Bluetooth connections and network segmentation to mitigate potential threats. As IoT adoption continues to grow, hidden vulnerabilities in widely used hardware remain a critical concern. Businesses and consumers alike must stay vigilant because even a small undocumented function in a single chip can have far-reaching security consequences. That's it for today's update. If you need help navigating threats or supporting and building a plan to protect your business, the same advisors who collate these insights are here to help. Head over to unbreakableventures.com to book a complimentary chat online with one of them today. If you found this podcast useful, consider subscribing to Unbreakable Ventures or share the article to your LinkedIn network to help spread the word. After all, resilience is about community and communication. Until next time, stay curious, stay informed, stay safe.
Unbreakable Ventures is brought to you by the senior advisory team at Fix Inc., a boutique resilience advisory based in Oceania and the ASEAN region. Special thanks to Europe's leading SaaS provider for resilience software, F24. Our articles are researched and published by industry specialists across New Zealand, Australia, Malaysia, and the United Kingdom. This podcast provides advice and information on disaster recovery and the threat landscape. The content is not a substitute for expert guidance during a crisis. Unbreakable Ventures is a publication operated by Fixing Consulting Partners, a Fixing Group company.